what's going on, but you can see the volatility there in both the bond market and the equity market. So be a little bit careful here. Very thin on the ladder ticket. And it's going to be whipping around quite a bit here. So if you're not used to volatility, be careful. Definitely looking at 4 to 5 points on our stops here with our targets as well. So keep that in mind. If that's too much volatility for you, patience, and then let the market kind of settle down a little bit. Our pivot this morning is going to be 39.12. 39.12. Resistance at 21, 31, 42, 52, and 60. And support below at 01, 38.92, 83, 74, and 64. Pivot 12, support 39.01, 38.92, 83, 74, 64. Resistance on the upside at 21, 31, 42, 52, 60. All right. As the market here is reacting to kind of a hottish number, but some of the underlying numbers underneath it were a little bit kind of disinflationary, and that's why the bond market has a 128 handle. Bond market recovered a lot here over the last 24 hours or so. Repeat the levels again. Our pivot is 12, 39.12, support at 01, 38.92, 83, 74, 64. Resistance on the upside at 21, 31, 42, 52, and 60. As we drift down here a little bit, again, be careful of the volatility. Definitely have to expand your stops here a little bit. As you can see, there's hardly any 100 lots in the ladder ticket, a lot of 40s and 50s. A lot of volatility this morning, reaction to the unemployment number, which we'll talk about in a minute. Coming down here to the 01 area again, have to understand your stops, have to be expanded here a little bit. Got right down to our green band there, right around that 3.5, 4. You have to take those into consideration sometimes if you're trading, and then use levels underneath as the secondary support there. The market very kind of happy-ish here. I don't know how, why, but the bond market always seems to react first to things, and they're definitely reacting first to things. Is the quick rotation there off of our green band area, and that would be backed up by our 01 support if you are so inclined. So again, if anybody has any questions, feel free to ask. If you look at the chat box, you'll see the levels there we have printed there for you. Again, use those as a guide to the day. Nice rotation there against the green band area there, 03.5. Remember, you have to expand your stops here a little bit because of the volatility, and if it's too much risk at the moment, things will slow down a little bit. So you have to understand your risk tolerance and trade it accordingly. All right. All right, we can come quickly back up here. We got resistance at 21. You can see it's very, very choppy. Moving around very quickly. So keep that in consideration when you're trading. Uh, like I said, I don't think they're going to be turning it over till, let's see here. Actually, they did turn it over. There's a lot. Yeah, I guess they turned it over today. Wow. Yeah, I might as well trade the new contract on Monday since I won't be here though. So, um, you can. I can't believe they switched over today. That's pretty amazing that they're doing that on employment. All right. Well, it is what it is. Yeah. Trade the new contract on Monday. So today they're turning over the March contract to June today, but we'll switch over on Monday as we come back down here. I'm gonna retest maybe the one area again, scale in a little bit differently here because of the volatility. Right, your scale has to be a little bit different. Then I switched down the 4 level, which is like we had originally. I'm coming back up here. This thing is one area. Okay, again, we're trading the March contract, but we'll flip over to the June on Monday. All right, coming right down here to, again, because of where it stopped, you could maybe adjust a little bit if you're too risk averse because it stopped at 4, then I get it. But it is just kind of hanging around this one area here a little bit. And you have to take into consideration the volatility. Just be careful. If you don't like the price action, definitely giving you a chance to exit here for a little bit, a scratch, a little bit profit. Not the best rotation there for us, so hopefully you can adjust a little bit. Here's the one. Again, you have choices. It's not running away from us, so you do have choices. It's not the best price action for us, but it is holding. Okay. Getting a little bit of a profit here. All right. All right, nice rotation there against the L1 area. Again, like I said, it was holding, so kind of held there for a bit, but gave you choices. That's what we like. All we can do is like choices. They're not bad choices. You either scratch, take a little bit of a profit, hold on to it, adjust your exit strategy. Different choices that you had. Nothing wrong with that. And if you're trying to stay long against it, rotation up to the pivot there would be nice, but definitely only a small amount that you got left over. All right. So bonds here, very, very happy. Let's talk about the numbers that came out this morning with the unemployment numbers. They were expecting Again, a little hotter than expected, but this doesn't stop. They were expecting 225, comes in at 311. Okay, Don. Thank you. But I don't think the hardest thing to do is probably just to flip over to the June contract. I don't think that'll be it. But if there's an issue, I'll definitely give you. You can call me too anytime. The 311, they were expecting 225. The unemployment rate, they were expecting 3.4, went up to 3.6. Hourly earnings, they're expecting plus 0.3, came out at plus 0.2, which is why the bond market is kind of rallying as the market continues to downtick. We're looking at the 92 area next. The average hourly weekly hours, they're expecting 34.6, came in at 34.5. Again, as far as inflation was concerned, those are the two good numbers within the scope of that big increase in non-farm payrolls. So if there's a reason for it to rally in the bond market, at least those are only two reasons of those numbers that I could see. I thought you were going to use your charts totally instead of mine. So, I mean, if you're going to use your chart, and again, how do we go to S, right? Do you remember the procedure? I can do it after the close. Bond market chart a little bit here for us. Bond market, big move here in the bonds as we continue to downtick, coming down here to our 92 area. Okay. Again, we talked about the volatility being a lot. And so if you were concerned about the volatility, take that into consideration. And, if you don't want to trade and wait for it to settle down, then that's a choice you have. Yeah, Don, go ahead.
To change them, you just go to the chart that you want to change, click in the white space, and then hit the S, and then pick the contract that you want to go to.
Okay.
I can use my charts. It's no big deal.
Yeah, I thought that'd be easier just to use your charts, and
okay.
And then that way you don't have to worry about. You can adjust yours. You can go to wherever you move it wherever you want to move it. It'd be easier for you, I think.
Okay.
All right, working this 92 area here a little bit. Trying to give us a little bit of a rotation. We've got to take some profits along the way here, even though we're not getting. Trying to get a little bit more than 2 points, obviously, and take into consideration volatility, but definitely take what it's giving you. Bonds again, doing their own thing. Definitely coming off of the, there is a bank problem with one of the banks that are out there that was falling apart, and it looks like bond markets might be reacting to that a little bit as well. I'm not sure, but it seems like it. Let's see here. Silicon Valley Bank the investing world is still trying to determine whether there is another bank crisis on the horizon following the collapse of Silvergate Capital and the shoring up of Silicon on Valley Bank shares of the latter parent, SVB Financial, tumbled 60% and is down 200 is $276 stock of 200 down to $40 this morning. They even halted trade this morning. Panic quickly spread to broader markets as the bank shares across Wall Street reacted to the development and pushed the S&P financial sector down 4% by the close, marking the worst day one day since June of 2020. Steering up fears among investors, SVP Financial announced it would raise $2.25 billion in new capital through 2 offerings and a private placement. The money would go to shore up the balance sheet, which was dented by the sale of a loss-making bond portfolio consisting mostly of U.S. Treasuries. Oops. The bank apparently lost $1.8 billion on the trade, and it rushed to sell all the small interest bonds. Oops. An inverted yield curve creating a headwind for those who are borrowing short-term and lending long. Oops. All right, we're coming down here to the lows again, looking at the 83 next. We only got like 2 or 3 points on that little trade there, so not the best, but maybe we're at least lighten the load here, even if you had to take your to get stopped out on anything else. Again, it's managing risk a little bit here. This is not a perfect game. Remember that. You got to always look at the price action to help you determine what you're going to do as we continue to downtick. We're looking at the 83 here as our next little support. And again, the market is definitely not happy. There's a big 500 lot there at 85, as you can see. At least we're kind of holding out the market for a bit. So we've got 83 on the downside of support. Again, make sure you understand the risk, trade smaller. You don't have to trade bigger, and kind of just let the market kind of do its thing. All right, there they take out the 500 lot, quickly come down to the 83 here. All right, nice little rotation there against the 83 area. There's at least 3 points there. You got to take some profits here, as you can see. You can't fight the trend, but you can fight just try to take advantage of the ebbs and flows. Then coming back in here to the lows. Again, keep your stops in place. We're not loving any trade. And also giving you a chance here to, if it bumps back up to the 83, to maybe scratch whatever you got left over. Or not. Okay, next level we're looking at is down at the 74 area. Again, this is volatility. We talked about this, and if it's too much, then just be patient and things will settle down. So you don't have to, you definitely have to understand the risk involved and then trade it accordingly or not trade it.